So look, if you're running a business and you're working as a sole trader, you're filling out your self-assessment tax return and your turnover is over £30,000, these new rules are coming your way and you need to understand them. So I'm going to help you break it down so you understand. So is it going to apply to you? Look, HMRC is rolling out this scheme called Making Tax Digital for Income Tax. You might see the acronym around the place, MTD ITSA. You know, they love these catchy phrases, don't they? But look, from April of 2026, sole traders with a turnover of £50,000 will have to file quarterly tax returns. From April of 2027, this is actually going to apply for anyone who's got a turnover of £30,000. You might have already had a letter from HMRC because they've seen from your prior returns what your turnover's been, and they're saying, look, you're going to have to come into this process as well. This is important, this next bit, is it's turnover and not profit. And this is what you invoice before you apply your expenses. HMRC is going to kind of have a look at your gross income for the last 2 years before, basically. So your 24-25 tax return, which is going to be filed in January 26, is going to decide whether you're going to fall into these rules. If you've already submitted a tax return for the previous tax year and you were over that £50,000, it's likely HMRC have already written to you and said you're going to be pulled into this system. So what do you actually have to do? That's the important thing. Well, firstly, you're going to have to send quarterly updates of your income and expenses. The next part is you're going to have to submit a final statement at the end of the year, and this is going to kind of replace the old self-assessment system. And you're going to have to use software. Spreadsheets alone aren't going to cut it anymore, and you're going to have to move on to some sort of approved accountancy software, and there is a whole list of approved software providers. We use a product called Xero, Xero, for our clients, and they've just released a kind of a cut down version of their product called Simpled, which is going to allow you to do this. So I think the key thing is kind of what software are we going to have to use with all of this is, ultimately the software you're using, and why we're recommending something like Xero, is it's easy to record your income and expenses. You've got an invoicing tool in there. You can literally click the button. You can generate an invoice to your customer. It's recorded. Lovely. Any purchases as well. There's a nice section in there. It comes with a nice product for invoice scanning as well. So you take a picture of it. It's stored digitally. It comes in with some of that data already pre-populated. It's kind of cutting things down as well. Things like Xero, there are other providers out there. They come with really useful things like bank feeds. So you connect it up to your business bank account. It brings all of the transactions in for you, and just makes your life really, really easy. You just go in kind of once a week, you click the button going, that's what that was for what the other was for, and it's just going to build it automatically for you. We'll ultimately connect that software up to HMRC, and it'll allow you to file those quarterly and end of year submissions. I think if you're not sure, I think going and speaking to an accountant is really, really important before you actually commit to anything, because this is kind of a big change. I know we've got a lot of trade clients in particular, and that this isn't their strong point. It's not why they got into doing their trade. They were they're good at using their hands fundamentally, and they're not really great with kind of the computer side of things. But it's something you're going to have to do. And I think going and working with the right people, understanding what's going on, is actually kind of really important. So is this going to change the amount of tax that you're going to pay? No, it's not. You're still going to have the normal tax payment. So you have the 31st of January, which is your balancing payment where you're paying your tax and your payments on account. If you're already in the system, that's why we call it a balancing payment, because it's taking into account those payments on account as well. 31st of July, you'll pay your second payment on account as normal. Quarterly payments may come in the future, and HMRC have kind of hinted at that as well. So we're just going to have to watch this space and see exactly what happens. So here are some quick tips to help you prepare for this. Is you need to track your income and expenses little and often. Don't leave it to the end of the year. That's not the way to go. Use a separate business bank account and have good account conduct. And what do I mean by that is you will have a debit card for that business bank account. When you are out and about, let's say you're buying materials, if you're a tradesperson, use that debit card. Means it's capturing all of those transactions so we can see everything really, really visibly. Get into the habit of kind of scanning things in, but having a business bank account is really, really simple because you're making sure that you're putting everything through. Your business bank account is not for your daily coffee at McDonald's or your Starbucks or whatever your poison happens to be. It is literally for your business. So that's what I mean by good account conduct, is make sure you are kind of just putting through those business things as well. Use apps to your advantage. I've mentioned Xero, I've mentioned HubDoc. These are apps that will help you. Xero comes with a nice little app, and if you are a sole trader and you're out on the road all the time, actually the Xero app's great. You just log in, I want to generate an invoice, you can do it on your phone and you can send it off to your customer. Really, really, really easy. And things like HubDoc, it's just great. You've got a little app there. You just, let's say you've gone to the post office, you just get the receipt, you take a picture of it, and it's in. Easy, and it's stored as well digitally. You don't need to keep the paper once it's kind of in as well. And I think finally, it's just regular savings for your tax bills. A very rough rule of thumb is basically set 25% of your income aside to cover those tax bills. But if you're using software, the wonderful thing is you can log in at any time, run a profit and loss, and you can actually calculate what your tax bill is going to be as you go along. And I've got kind of so many clients, they leave it to the end of the year and they're like, oh my god, I didn't realize I'd made so much money. But I've got other clients on the other hand who are really, really engaged with this already. They already know where they stand, they feel really in control, and that's where you want to be as well, is get yourself into a position where you're in control as well. So what happens if you earn less than £30,000? Well, you're not affected yet. It's likely thresholds might drop in the future, but at the moment it's at that £30,000. So let's hope it stays there for the moment. Anyway, just if you're in that boat. Look, if you're unsure how this affects you, I think the first stage is to do the basics. Get that business bank account open, get the right piece of software, speak to an accountant. You don't want to have to necessarily learn all these new tools. My accountancy firm, that kind of my day job at Orange Umbrella, we're geared up, ready to help people with this. So I've also done a fact sheet on making tax digital. So in the description of this video, I'll make sure I've put that fact sheet as well, and you can just run through it and you can see it as just kind of a point of reference. Look, if you found the video useful, please subscribe to my YouTube channel. It makes a huge amount of difference. And obviously, if you know any fellow sole traders who are worried about making tax digital, then make sure you point them towards this video. Anyway, I'll see you next time. Thanks. Bye.